Alright, what's going on, everybody? It is Sunday, June 9th. We're getting set to do our weekly Outlook video for this coming week, starting with Monday the 10th, obviously. We did update the blog with all of our targets and everything, so that is something to keep an eye on. Obviously, based on what we did to the blog and the targets, we are bullish coming into the week. We did expect that low in the 1590s. We called that midday reversal in the chat room, and then we basket longed the financials going into Friday. That was a huge day. We did the wrap-up video the other day, so if you want to check that out, I highly suggest that. Some huge plays. But what we're going to do today is talk about what we're looking for this week as far as the broad market, and then what we're looking for from individual stocks and our game plan going forward. Alright, so as far as the broad market and the SPX is concerned, for me to really get uber bullish and start talking about we're going to break this high, we're really going to break it, I need to see us sustain over 1646 and a half. The reason for that is my midline on the Keltner channel. That'll kind of reset everything as far as what we lost this past week, and that would really have me looking for a move back towards 1672 or on the SPY 167s, and I think at that point we're kind of assuming that from there we're going to break that high and break into the 1700s. I think we do have a bullish case for that. We can make that argument and be pretty safe in that assumption, but as always, we like to see confirmation as to what we're working with. So again, I need to see this get over 1646. At that point, once we hold that and test that level as far as going back to the downside and we bounce, then I'm really going to get uber bullish and start talking about that. We do have a ton of room this week to go. Everything really reset. We saw a tremendous amount of volatility the past 2 days. And everything's really looking pretty good for that. Now, I'm not going to talk about the SPY because that just correlates off the SPX. But Netflix, I will talk about here. And my hope for Netflix usually is one of those stocks that we play pretty much daily. It's good for a breakout with the market. It's good for a breakdown with the market. It's really good for everything. But what we're seeing here is a need to chop out and kind of reset the chart. So I didn't actually come out with a target on the blog, and I'm not going to do that here either. I am going to say be careful with how you play this Netflix, because frankly, I do see a need for it to chop out early in the week. I think by around Wednesday, we could get some indication of an upward move coming. Obviously, we're going to have that bullish preconceived notion just based on what we expect the market to do. So that's that. Amazon, we talked about this Amazon being in this massive channel pretty much ever since the new year. It does appear like it wants to break out, although I will tell you, this high of 280, that long-wicked candle, that was high-frequency trading. It had something like 10,000 or 100,000, I'm not really sure what the number was, quotes displayed on a particular 5-minute candle. It was crazy. So that 280 is not really a true high. The true high was like 277. Which ironically was one of our targets. I do think we see a test of that high at 284. I think what we're doing here, and the setup that we have here right now, is we have an expanding triangle that hasn't, an expanding channel that hasn't fully taken formation yet, and I think that's what's going to happen here. Ideally, I'd like to see a move into the 290s before we come back down. Obviously, if this is the end and this is the move that we've been waiting on, there's going to be some tremendous volatility, and there's going to be a huge reaction that probably, in all likelihood, will bring us into the 300, which is something we've talked about in the past. Bank of America has really followed suit with the market very well in the past couple months. I did tweet out on Thursday and again on Friday about the June 14 the June 14 strike, the monthly calls. They were trading at 6 cents. We did take a minor position into the weekend. We do expect a gap up. Obviously, that'll only happen if the market gaps up. But frankly, I'm probably going to end up loading every chance I get, every dip on those June monthly 14 strikes. I do see a ton of room here for an upward move along with the market. Obviously, just based on my expectations for the market, if the market does reach highs and establish a new high, and if it does establish a new high, which I expect to be in the 1700s, I expect this Bank of America to be in 14s. We did throw out a couple targets for the week, like 1360, and then that high, or actually it was 1370, and then the high at 1399. But our ideal target on this is 1430. That's kind of where we think all is said and done, that we'll be able to get out of those June monthly calls. Goldman Sachs was just a monster play on Friday. We did talk about that on Thursday in the blog. But frankly, we don't think this Goldman's done. Goldman has been leading the market ever since our real bullish run here starting on the new year. It's been a great indicator as far as what we expected the market to do, and in a lot of ways, it's shown us the move before the market even reacts. We do expect this to continue to move towards 170. I mean, the question really remains, how high can this go? And if the market remains strong and we do see into the 1700s, Goldman could probably see 180. Obviously, I don't expect that this week. I expect us to get to 170, but after that, we'll see what really happens from there. I think LinkedIn has room to go north, although I would be skeptical to play it only because it's really had a lack of volatility and a lack of movement lately. I would really need to see a buyer jump in here and start pushing this thing higher. Our first target was 174 for the week. Obviously, just based on LinkedIn's track record, that is most likely going to happen in the first day. So I'll have to come back and come out with another target. If we do see a buyer, though, I would kind of expect this buyer to push us past 180. It's a very interesting chart setup as far as ever since that new high was established. I do kind of expect a megaphone type pattern to come out here, which would be an expanding triangle, expanding channel, whatever you want to call it. So that's something I'm going to be keeping on watch for a move. I really wouldn't hold LinkedIn overnight. It would be a day trade most likely, or a couple day trades depending. But that's something I'm keeping on watch. Visa has been just incredibly annoying to trade lately. It doesn't really want to make huge moves when the market makes huge moves. It doesn't want to make small moves when we're making small moves. It just wants to do its own damn thing. With that being said, I do expect a buyer to jump in here early in the week and start pushing it higher. I'm pretty sure on the blog I said that I was just going to wait and let it chop and see what really happens. And I do agree with that analysis of it. Although I will be keeping a pretty strong eye on it because I do think that the one day we don't watch it, it'll pull a 4-point move and we'll all be kind of upset that we missed it. Google had a fantastic Friday. The calls went off for like 400% or something like that. We do expect this Google to get back into uh, the 900s on this leg up, obviously. Our first target was 839, and then from there it was like 906, and then from there, obviously it tested its current high of 920.6. I will say this much. If Google is ripping, I do expect to see some of these tech stocks to catch a pretty major bid and to go along with it. I do think we could see a new high established within the next week and a half, possibly sooner, depending on how strong we are. But that's it. Apple, this damn Apple, it did break its downtrend and has created a nice little base around the 440s, 435s, which we do like to see. I'd like to see accumulation start picking up a little bit. I do think it could pull a move into the 460s again. It's got a ton of room to go this week. I would expect a slow start to the week, frankly. Our first target was the midline on the Keltner channel of like 450, and then from there, like 456, and then 460, and so on. I like to kind of piecemeal this Apple, only because it's never really sure what it wants to do until it does it. So I'd really be careful trading this and make sure you see a buyer before you get in. Okay. Priceline held up incredibly well. I mean, we did expect that just based on the fact that I think something like 93% of Priceline is institutional ownership. So you know they're not going to want to take the loss on that. And probably after that little dip here, it's probably much more than that now. But our first target for Priceline is 830. I didn't actually come out with a target on Priceline for the blog, only because it is a very expensive option to play, and it's not something that we play regularly. But yeah, 830, and then from there, obviously, a break of that high. I do think it can do it, obviously, based on the fact that the institutional owners are going to want to dump it on top of the retail investor's head, which sucks, but that's reality. Baidu is incredibly, incredibly strong, oddly enough, with no real rhyme or reason. We did talk about this gap fill. We are in the gap now. The gap's at like 106, which is our target. So just based on the huge trend that we're in right now, and out of nowhere, the massive ripping, we do expect this Baidu to continue into the trend further and to close that gap. And then from there, we'll kind of see what's going to happen. Fossil, I hate Fossil, but I'm not really going to look at this as far as the trade is concerned, only because of how it reacted to that high. It ripped like 3 points off open and then just lost everything. Ended up hitting our target of like 106, but it was not really overly strong most of the day. Just kind of weird. So I'm going to lay off this for now, and I'll come back. If there is strength, though, I do expect to move to 110. So keep an eye for that. Cat. It's another one that wasn't really overly strong, but a move towards 87. Actually, probably 86.69 would be the target going into the week. It could get a real volatile, bullish day if the market's running and just follow suit, but overall right now it looks pretty weak. IBM, I like the IBM long here. Only problem is IBM is typically a pretty annoying stock to play with. Our target there would be 208, and then 210. We were looking for a break of that high a couple weeks back, but very odd that it drops 20 points on earnings and then comes back and rips like 16, 17 points and is now in a position where it could realistically take down that high. So I think there's a lot of manipulation going on here, a lot of questionable activity. But a trade's a trade, and we'll likely take this to 210 this week. Lulu, I'm getting conflicting indications, but I do like the long here. And our first target would be 83, and then like 87. I think it could pull a nice 10-point week with the market, like it did back here. It did hold up pretty damn strong all throughout that fade that we had, and it did have earnings. Oh no, it has earnings. Excuse me. It's got earnings on Monday, so be careful. Actually, this is a non-trade right now, just based on earnings. I'll wait to see what the earnings do, and we'll go from there. Citigroup, obviously we're long the banks this week. Our first target would be 82.2, and then a test of that high. Or actually, no, our first target would be 82.7, and then a test of that high. But we expect a big move out of these banks. MA, MasterCard falls into that as well. We do expect to see buyers come back into these bank stocks and push them back up towards high with the market. I will say MasterCard does look like it kind of wants to chop out for a day or so, but I think that it just rips with the market. An ideal target would be 284 before we break that high. Obviously, that's like a 20-point move from here, so that's not our target for now. Our target for now is 574, and we'll move from there. JPM, another bank, obviously. This one held up pretty damn well, all things considering. It's only a little more than a point away from its high. That's probably going to fall in 2 days, depending on market strength. So with that being said, our first target would be 55.03, and then test that high. I'm not really going to talk about this AIG, only because it's another bank and I'm getting sick of them. Tesla's very, very hard to come up with targets for lately, only because the way it ran up, it was such a volatile move. There's not really enough data for me to figure out what's accurately going to happen. I will say this, I would not be shocked to see Tesla come back and break that high on market strength. I think that's an assumed move at this point. Our first target would be 106 though, and then from there, I think you'll see a nice 8-point day towards high. These solars, they all really are showing they want to run towards high. Problem with the solars is a lot of them have monthly contracts, and they're still 2 weeks away from expiration. So because of that, the contracts are going to be jacked through the roof, and it's really not worth taking a trade on at this point. I will say overall, though, all of the solars look pretty bullish, and they look pretty good. So I would keep an eye on them going into the week if you're looking to play with the monthlies. LVS, Las Vegas Sands, despite my best effort to prop the company up with my massive gambling when I was in Vegas, obviously hasn't really worked overly well. But I will say this looks like it wants to chop out another one like Netflix until about Wednesday, and then from there we'll come back and update it and go from there. MGM, ironically, is the opposite of LVS. MGM wants to do some running. Our first target would be 15.27, and then from there we would look for 15.9 or a break of that high. I think some money's coming in here. It did hold its low on Thursday and did pretty well on Friday. So I would seriously consider keeping an eye on that. And then FNMA, Fannie Mae. We don't really talk about Fannie Mae all that much, but we did initiate a short at 2.6 for quite a substantial amount of shares, or at least what we deem substantial. And although we did have an opportunity to cover on Thursday, we did not. We did not cover on Friday because we still see reason to believe that this might go lower. As far as a target, I think it could see 1.7, maybe lower. But if it breaks 2.05, I'm probably going to cover. And that's really, that's really all I got for you guys today for this week's update. I'm going to try and upload this in HD. If it doesn't work, I apologize. But that's it. Check out the blog. I'm updating it every day. And I will see you guys on Monday.